Welcome to the Rex Andrews Show. Glad to have you here. If you're a new listener, we're glad you found us. Welcome aboard. Don't forget to comment. We like the engagement. If you are a returning listener, thank you very much. We are one of the fastest growing podcasts out there, made the top 10%. So it's exciting because of you and our great listeners. And that's an accomplishment for you folks because I'm just a knucklehead behind the mic and there are over 1 million podcasts in the marketplace today. So you have lots of choices. Quick house cleaning before we get started here today. Don't forget to subscribe if you don't like the platform you're listening on. There are 23 other choices. So wherever you get podcasts and you like them, go there. And you can always find us on the major social media sites. And of course, please do visit rexandrewshow.com because we have the bios of all of our guests. So past, previous, and current. So you'll be able to find out more information about them, links to their content, and see what they're up to. Plus, we're doing some fun things out there. Okay. So today I've got a great guest, but I always remind people because this is my ADD world in a bit. There are too many interests for me in just one lifetime. And around every corner, there's just another discovery. So we've got one of those today. I have a great guest, and he's not far from me today. Occasionally, I find people here in Colorado, so it's exciting to have a Coloradoan on with me. He started out his career at Fidelity, spent 16 years there. So in the whole financial investments and managing money business, various roles. He's a husband and a father. And most importantly, today, we're going to talk about what he's up to. He's the founder of Invest with Rules. So welcome to the show, Scott Bennett.
Yeah, Rex, thank you so much for having me. I really enjoy your podcast, and I find it a great eclectic mix, and I always learn. So I really thank you. Thanks for having me.
We have a lot of fun. So listen, Scott, so we have some people who play along as they listen, they're multitasking. So could you give out your website on how to get a hold of you in case they want to, scope things out as they're listening today?
Yeah, thank you. The best place to find me is investwithrules.com. That is where you can sign up for free for my free investment newsletter that comes out weekly on Monday mornings. I hope you enjoy it.
Fantastic. Thanks. I appreciate that. Okay. So as you know, if you're an existing listener and you've returned, this is all about interesting people, interesting stories, interesting topics. And so in order to get there, we always want to look at the backstory, I guess they call it today. Where did you grow up? How many siblings did you have? Where were you born? What did your parents do? What was the schooling like? What did you do when you were growing up, besides be a hoodlum? Just kidding. And, help us get to where you are today. So, Scott, where did this all begin?
Yes, I grew up in Massachusetts in a suburb south of Boston.
Okay.
I can hide my accent well.
I was going to say, wait a minute, you don't sound like you're from Boston.
I did spend, I lived up in the city for a few years. So I did live relatively close to Harvard Square. So I can put the accent on.
Okay.
Just so people from Boston know I'm legitimate. I do typically start my day with the Dunkin' Donuts coffee at home.
Okay.
So I am legitimized.
Well, that's funny. I've love Boston. My daughter is in medical school at Tufts. So so love Boston. Great town. Great town.
Oh, excellent. Yeah, it's if it's a spring or the fall, that's the time to visit. Outside of that, it's difficult. But yeah, that's where I grew up. I have an older sister, and my folks, my mother, she was a credit manager at a fabrics company.
Okay.
Fortunately, it's been hard. Last year, unfortunately, we lost her due to metastasized lung cancer. So we're
sorry to hear that.
Thank you. We're still kind of dealing and missing her greatly.
Yep.
My father, absolute great guy. He, for his career, he's a manufacturer's representative. So he was representing factories that deliver typically sporting goods and toys to major retailers. Okay. And what was really cool growing up is that I had access and insights into, he's always 6 months or a year ahead with different seasons and holidays. So I had access to some pretty cool toy samples as a kid, which was always really cool. And as I grew up playing sports, I had sporting goods samples. So it was a fun career to be a part of. And eventually he went independent and became an entrepreneur. So I always really
Nice.
valued that because he was around, which was really cool.
Nice. So when you were growing up, were you was your household, with your sister? Was it WrestleMania? Was it a love fest? How did it work out? Working,
You know,
hanging out with your sister.
yeah. Thanks for asking. She's outstanding. So she's still in Massachusetts with her amazing family, and she's 5 years older. So I think the
Okay.
5 year break, we were never really in school together. We were always a little bit separate. So no WrestleMania. Always been really cordial. Always had a great relationship, and I love seeing them, but. It's never easy when you're a little bit far away when they're in Boston or outside Boston and we're in Denver, but
Yeah.
great relationship.
Okay. Now, what kind of sport? You said you played sports. What sports did you play?
Yeah, my father's a huge baseball guy.
Okay.
So originally from Brooklyn, so he was a huge Brooklyn Dodger fan before they left for LA. So he instilled baseball in me to start.
Okay.
I did play a little bit of soccer growing up. And then what was interesting is I found quickly that my lefty baseball swing turned into my tennis backhand. So
Okay.
so tennis was my sport. I really enjoyed it. What's kind of funny and humbling is my wife. She was a collegiate, a really outstanding tennis player. So even though I was ranked growing up in New England as a decent tennis player, her ground strokes, her overall game is far superior to mine. So it is an incredible workout when it's nice to go outside and hit with her.
That's nice. That's nice. Now, did you become a fan of the Red Sox? Did you follow the Dodgers when you were a kid in baseball?
Yeah, so I guess I disobeyed my father. I was a Red Sox fan.
Okay. Well, there's
It's
nothing.
been
There's nothing like Fenway. It's a very
yeah,
unique park.
it's definitely intimate as your elbow is always touching someone else,
That's right.
and you could potentially sit behind a pole, which is always an option that you have to pay for. But yeah,
That's a bonus, right? Got that for free. Yeah.
I always thought it was cool when they started putting seats in every nook and cranny of the place, where they're putting seats on the wall, seats in the corner. There's nowhere left, I don't think.
Yeah, that's great. Okay, so fantastic. So you went on through high school. You played. Now, did you pick up tennis? When did you pick up tennis?
It was my folks played, so I picked it
Okay.
up really young, and then I got really serious, kind of in the high school area.
Okay.
I wasn't good enough to play in college, but I really enjoyed it. I did, although it is very low claim to fame, I did win several free intramural T-shirts in college. I went to the University of Massachusetts, so I had some really fun playing doubles, but it's really just for fun now.
Well, that's good. Yeah, my son-in-law is like the king of intramural championships T-shirts, and they even play volleyball these days. So I just kind of chuckle and laugh at him. So that's great. All
Yeah,
right,
we're the best of the best of the rest.
that's right. Okay, so you went to UMass. How was your experience in college? What did you major in?
I had a great experience. I was an economics major. It was a really great time. It was interesting. I knew that college is just so incredibly expensive,
Sure.
and going to a state school for me was, in my opinion, the best option. I met incredible friends. I thought it was great. I got to meet friends from a wide, diverse background.
Mm-hmm.
I look back on that time as just absolute fun, learned a lot, and just a really overall great experience.
Okay. So out of school, did you go directly to Fidelity then, or did you have any hops before that?
Yeah. So back to my father.
Okay.
So he, again, a huge baseball guy, played adult softball, and one of his teammates worked for Fidelity, and he was talking to him about it, and he said, there's potentially an opportunity for an internship at Fidelity. And my dad immediately, as a social bug, said, could my son go for it?
Sure.
And so it wasn't directly an internship, but it was an interview to get the internship. So luckily I was able to intern there in college. So I had my foot in the door for my very first real interview right out of college. So while most people were taking some time off or enjoying life, I went to Fidelity right away. So right out of school, I was working at Fidelity in Boston at the Seaport area, which has drastically changed from when I was working there. It's really developed and really nice.
Yep.
And I had a really great 16-year career there.
Now, did you come to Colorado with Fidelity then?
I did. So I started as a mutual fund accountant. So there actually is a human that oversees technology that prices mutual funds and does all that
Okay,
kind of grunt work. And then I kind of realized quickly that I needed to get closer to the client to be able to financially survive in Boston.
sure. Very
And
expensive city, that's for sure.
yeah, I was just living paycheck to paycheck.
Yeah.
And I I did a quick stint at Fidelity's phone center up in New Hampshire. So I had a pretty rough commute because I really wanted to live near friends and family in Massachusetts. And I remember maybe a little after a year or plus at the Fidelity phone center of kind of, there's nothing better than when you take phone calls, you learn real quick
Yeah.
because you're on the line. So I remember I went to the job board. I was single, I was young, I was flexible, and I remember there was two openings, and one said Denver, Colorado, even though it technically was Broomfield,
Sure.
and the other one was somewhere else. I think it was Oregon. And I enjoyed skiing. I enjoy the outdoors, and I
Yeah.
read that it had 300 plus days of sunshine.
Yeah.
And no offense to Boston, it's not the world's best weather certain
No,
seasons. So
no.
I packed up and I didn't know a soul, and I moved to Denver.
Wow, that's bold. Well, you're exactly right about the sunshine, but I hope nobody is listening out there about that. Just skip over that fact. We don't need any more. But when I lived in Connecticut, that's the thing I missed the most, because we lived just outside of New Haven, and I commuted into the city a lot for work. I made it up to Boston quite a bit, but um, it was so gray all the time. I mean, that was like the normal color of the skies. I was just like, what's going on? It was just, especially in the winter, it was just like a gray, gray haze. And I missed the Colorado sunshine growing up here. So that's great. Now you got out to here to Colorado and you kind of helped to get things going up here in Broomfield, I understand. Um, did you have the same role that you were doing in Boston?
Similar. So I was that nice person at the front counter who smiled at you, answered your questions, and took in your your deposit. So it was an entry level role.
Okay,
I just really wanted to. I knew Boston's a great place, but I knew if I moved west, I had a really strong work ethic. I could kind of outwork and work longer hours than most people, and kind of
sure.
I love to kind of work hard. Um, so I was the starting role, learned a lot, and I was able to progress because I know Fidelity's really become quite large here in Colorado. They have
Yep,
a phone
absolutely.
center and 5 branches, I believe, maybe even more now. And back then it was just 3 offices. And so if you worked hard, you could really progress.
Well, that's good. Okay, so now did you meet your wife here in Colorado, obviously, then, I would think?
I did. I got totally lucky. So I was living downtown near the Commons Park area, right in the heart of the city. And I remember this day. It's kind of funny. I was getting home from work. I was really tired. It was a late afternoon, and all of a sudden, like my now next door neighbors, some of her and her girlfriends were moving in. And I remember I put my head down because they had a huge moving truck with tons of stuff. And as we were spiraling up to the fourth floor, I realized they were my next door neighbors. And I did actually legitimately have an excuse to not totally help, but I helped for a half an hour. I carried some heavy furniture, and I met them, and they were super nice. And we became really good friends, and I got so lucky that my next door neighbor is now my wife.
Oh, that's
So it was
great.
pretty cool that I got to meet her in the city soon after I moved.
Okay, cool. Now, skipping ahead, because you didn't have a whole lot of extra steps along the way. A lot of these people are sort of AD like me. I've done a ton of different things, but I also worked in tech where things evaporated about every 4 years. They were bought or beat out. So you started this invest with the rules. What was the pivot point that made you decide to do that?
Yeah. So one of the biggest challenges that I had professionally was definitely 2008.
Okay.
So at that
Yeah, rough
time,
year. Yep.
yeah. So the 2008 financial crisis, I was working at the time in the Broomfield Investor Center, call it 20 minutes north of Denver. And
Mm-hmm.
my role was face to face to do financial planning. I was one of their vice president financial consultants. And really what that simply means is I'm dedicated to a book of about around maybe a couple hundred clients. It's a lot of money that you're responsible for from a financial planning perspective.
Sure.
And I remember there were some really incredibly difficult days. And when the market started falling fast and it went from down like 10 to 20, 20 to 30, I just was just completely outnumbered and overwhelmed. And I just felt so horrible because all these projections that we run for clients based upon income and expenses and trying to plot out their life in retirement just to share what kind of, are you on track? The numbers started getting worse real fast. And
Right.
it's just an immense amount of stress. And I was doing, I don't know, 6+ appointments a day. I was on the phone all day. My phone was red lit. I had voicemails. I was just really crushed. And I just felt so horrible that all of these, I mean, outstanding people that I'm working for and working with, we're just getting hit hard. So 401ks dropping, IRAs falling. And I was like, I'm like, there's got to be some version of a better way. Like, there's got to be like another possible strategy that could help some of these people out. So I remember, so I guess that was where it wasn't always so rosy. But what is nice is Fidelity does educate their clients really well, stay the course, invest well, think long term.
Yep. Think long term. Yep.
But I do think that whenever someone's losing money that fast and it's that kind of devastating to their future, people panic and people sell. And
Sure.
as much of the good counsel we were providing, people were selling fast. They were jumping out of managed accounts at the world's worst time. And it was just a really hard time.
Sure.
So I personally tried to find kind of what could work and what does work. And I went on this kind of journey to figure out other strategies that could kind of protect a little bit better on downside exposure and give people a little bit of a smoother ride. So that's kind of the precipice of how everything got started.
So did you do that did you start it while you were at Fidelity, or did you just say, okay, I've had enough, I'm taking the parachute and I'm popping out?
Well, it was kind of twofold. So number one is, so my mother, unfortunately, she had a long battle with metastasized cancer. And so Fidelity was kind enough to help me professionally move back to the Massachusetts area.
Oh, wow.
So, which was really great. And I feel really lucky and grateful for it. So I did the same role back east for a few years. And I spent my weekends and nights hanging out with my parents and just trying to be supportive when things got really, really difficult. And it was tough where my wife and I had our son, and my mother was really struggling, and I ran out of time. So I took a leave of absence and I ran out of vacation time, and I just felt so horrible that I couldn't guarantee I was going to come back. So I ended up leaving Fidelity, and it after 16 years, and it was really hard. I could have honestly seen myself there forever. But unfortunately, I don't know, just watching my mother go through that, I know how precious time is, and I just needed more of it.
Okay.
So at that time, I think kind of one of the really pivotal stories for me before I left, I was at a dinner with Fidelity, and the most I mean, there's so many corporate meetings. Some are really good,
Sure.
Some are really dry. But there was this one dinner I was invited to, and I'm not totally sure why I was there, but it was a $200+ billion fund manager talking to an intimate room over dinner.
Wow.
And it was it was honestly one of the coolest experiences I've ever been to, where you immediately feel that this person has so much exposure that most people just don't have. So as companies and CEOs fly into Boston, take cars to see Fidelity, there's just, I mean, trillions of dollars that Fidelity's moving around. And obviously they want to show their company off on a good spotlight. And he's doing 20, 30 of these meetings, I mean, minimum per week. So he's getting the Shark Tank pitch all day long. And he's explaining his relationship with these CEOs, these businesses, and what's interesting and what's not. And you just immediately know that his background's incredible. His team and his expertise is fascinating. He's sharing just really awesome, intimate stories, and it's so cool. And I remember thinking, and I remember as he's mentioning all these companies and fascinating new innovations and disruptions, and I looked to my left and looked to my right, and everyone was either scribbling ticker symbols down of companies or on their cell phone typing as fast as they could companies that he was referencing. And I thought they didn't really totally know he was buying, because that's not disclosed, but
Sure.
they knew he liked the concept. So I started thinking about that, and my humongous aha moment that came to fruition after I left Fidelity was like, okay, so he's pushing around hundreds of billions of dollars, and what if I could figure out what he's buying, and if I could figure out what he's consistently buying and figure out what he's selling, and then what if I could find other funds, whether they be hedge funds, family offices, trusts, that are doing similar things, but what if they're going after the same stocks?
Right.
So that was my moment of kind of the precipice of Invest with Rules, where I help self-directed investors. And what I found working at Fidelity is that they really struggle kind of having that confidence to know what to buy, especially knowing when to sell. And I have a really simple ethical strategy that's definitely not insider trading,
Sure.
where I track billion-dollar fund managers, and I deliver for free the trends that they are creating by their buying patterns across about $1 trillion. And then I have a service called the Inner Circle, where I do give away the stocks in which I see them buying the most of and selling the most of.
Okay.
And in that way, my hope is that we can identify names and hold them for a little bit longer if they're still buying, and try to think long term, and then protect when things get a little ugly in the market.
Fantastic. So now, is this full time for you now? Is this your full business?
This is my full-time job, besides spending time with my great family.
Oh, that's great. So I just have to ask, because it's just one of the things that happened recently. What did you think about the whole GameStop thing?
You know, it's interesting. I know a lot of people would think last year, 2020, is kind of a reset, because you had a bear market, and it was kind of health-driven, virus-driven. And I think that there is an awful lot of money floating around. So,
Sure.
it's funny. I remember there was this TV show. It probably got almost no one watched it, but it's called like Wall Street Warriors. And it was this fascinating show where these two guys, back in the day when there was brokerage commissions, and they would put their clients into like one stock. And I remember watching this show, and like, this company's about to report earnings in the quarter, and like they were jumping up and down, so excited. Like, investing's supposed to be diversified and thoughtful, and not put it all on red.
Yeah.
And there is a community that is more short term, and they're using options, and they're bright. I mean, they're definitely looking at valuations. But I do think that there's a little bit more of a kind of a bet the house, using options. And most brokerage companies aren't totally prepared if there's a huge short position on a stock like GameStop, and everyone's piling in that can, and you get this kind of asymmetric kind of pull and rip up. If you're a short seller, at some point, you're going to have to buy those shares back at a higher price and get punished.
Exactly.
And then obviously there's a lot of controversy around, could you even buy more shares? And at one point you couldn't. So I just think that when there's a ton of money floating around, you're in a secular long bull market, the retail's playing, and they're going after thinner stocks. Kind of wild things can happen in very short periods of time.
It's interesting. I don't even remember do you remember the book? And I think it came out in the late 80s, that was called The Democratization of Money.
It sounds really familiar, but I'd love to hear more.
So the democratization of money was about two things. This was near the end of the Clinton administration. And the one thing that was happening is the two things were happening. One was the fact that for the first time, it was really cool for Democrats to have money. And so, you had all of the Clinton gang there, had the Tyson chicken food people and the Swift trucking and some of the Walmart and, family and stuff like that. So for really one of the first times since like Rockefeller or Kennedy times and almost back to Rockefeller, Democrats had money and it was cool, right? They weren't hiding the fact that they were wealthy individuals. But the second and most important thing was in the democratization of money was the fact that because of the internet, okay, so this was, coming up in the early 2000 type thing, was the fact that for the first time, what I call the bathrobe investor had access to their money. So before this, they would literally go to their broker and trader and advisors, and they would move the money around. Well, these people would sit in their bathrobe at home and watching CNN, and they would see these stories, and then they'd rush to their computer and start moving their assets around. And so the point of the book is that technology is making it for money to be a lot more liquid than ever before, because otherwise you had to call up your broker or your financial planner, or, whoever was managing your money, and they would help you make the moves. And I think we've seen over the last 20 years that this has gotten to be, I'm not going to say ridiculous, but the liquidity of money and assets and be able to move things quickly. I mean, that's hyper focused with what happened with GameStop. I mean, there were people making moves with that had no business making those moves, and it was a thundering herd, and people who weren't thinking, whenever there's an up, there's going to be a down. That's just life. So interesting times.
Yeah, it's an interesting, there's one really kind of quirky thing. I look at a lot of research and a lot of data constantly, but there's a website that tracks senator buying and selling of stocks because they have to file because they know way too much. And I think one of the senator's children bought and sold GameStop within a day or two. I just wondered what that family conversation was like as they have to report. And I just think it's just so, because everything is so visible. And I do think a lot of senator action was very scrutinized during before the coronavirus. And as I'm looking at kind of that one piece of data, you don't get that much from it just because I think it's the spotlight was on right before the coronavirus, as certain committees had access to what was going on more than other committees. But I do think that there's got to be some interesting conversations post GameStop that I'm sure a few made some good money, most didn't. And I think another really quirk of that we're living in now, which is really interesting, is there's so much money in passive index funds, rightfully so, because everyone is knowledgeable, fee aware, and on the internet. But a value or a small cap value ETF has to buy GameStop. And when the rebalance happens quarterly, they're going to have to sell GameStop. So there's also these repercussions of mass money movement to index funds that is computer generated. So there's all these intangibles, all these things that you just need to think about, that you have to kind of go layers deep. And I think that's just, people are busy. And I think sometimes GameStop gets forced upon you and you didn't even think it was going to.
Sure. Well, I think another concept that's interesting that just recently came out is the ability to, a couple of these apps, I don't know if Fidelity is in that market yet, where you can just go out and spend $100 and it's spread across a portfolio and you're just buying fractions. And so I think that's interesting, but great for somebody who is a small investor who may only have $15 or $20 a week or whatever the number is to go out and buy those fractional pieces of stock. I think that's interesting. And I've always wondered who's the person behind the scenes pulling the levers to help them present what stocks to be putting their money into.
Yeah, it's interesting. I have loving family who, when we talk, like once in a while, we'll talk investments, and sometimes the question comes up is, what's the price of that? What's the price per share?
Yeah.
And I always I stopped doing it. But at the beginning, I used to say, what's not as important as the price per share is what's the market capitalization? How much is the company worth and what we think it's going to be worth in the future? But now it does give someone access to buy like really expensive stocks and just buy a sliver of it.
Yeah.
And so whether they do it on their own or they go about more of a robo advisor activity, but it does give people more access to high share, high price stocks that never would have been able to buy a share in the past.
Yeah. Well, I've spent my entire career in tech, and I have watched dozens of times where companies are coming out with an IPO, and it's just like on just terrible numbers, no EBITDA. So you look at like Uber or Lyft or Airbnb, and these people are, they're jumping to out there in with these IPOs massively in debt. I mean, when Uber came out, it was their 26th round of raising capital. And I've never took the time to read any of the perspectives, but I think in round 25, I just kind of have some questions about what happened in the first 24 rounds. And so, my friends and I in tech who are a little more conservative would just scratch our heads and say, who's putting this stupid money up for these companies? Their stock's going to rocket up fast, and then these things aren't going to be worth it, hardly anything what they came out at. And then how can you be IPOing companies that are completely upside down, no EBITDA? Just crazy.
It goes back a little bit to our story of lots of money floating around.
Yeah.
So there's a lot of money trying to find homes.
Yep.
I think there's also stocks have good stories, which are it's easy to get kind of tricked by a good story, but have no earnings and sales. I think like the story, like two. So Lyft, again, this was always back check me, but Lyft is going after an interesting market where if someone is on Medicare and they need a ride to the doctor or a ride to get their vaccine shot, you can actually, using the app, hire Lyft to go pick up your parent or grandparent and go get them over there and get them back. And then they can write it off with Medicare. So Lyft is going after this human transportation.
Sure.
And I think recently Uber bought an alcohol delivery business recently.
Yep.
So if you're at work and there's a happy hour, I guess in theory you could deliver that with Uber. So there's so many layers of all these companies that I think it's hard to fully go through it. But I guess I'll ask you, since you had a really extensive career in tech, obviously it took many years for tech to finally get back to all-time highs from the early 2000s. So how was your experience with, because that was a really long setback after exuberance?
Well, if you look back to 2000, it was the whole .com, boom and stuff. And so you look at, there was grocery.com, there was pet.com, there was all this stuff where people were just rushing out. It was the internet and things are going to just boom overnight. Well, there's no such thing as an overnight success. There's always a technology life cycle adaptation. Okay. And so it's a bell curve. So out here on the left-hand side, the early people, the pioneers, then you have a early majority, a late majority, and then laggards. Well, we would see in tech, there was all this expectation that money was just poured into these companies. And we used to just call it stupid money because it would just be like you said, there's just money out there looking for a home kind of thing. And it was just crazy. And so you had these valuations that went up. I mean, these people who throw in millions and millions of dollars on these, and then they just petered out. Well, then everybody got sour on tech. They really got sour on tech. Now you had your mainstays like IBM, Oracle, SAP, Microsoft, Intel, Cisco, Qualcomm, companies like that really, stayed the course, long-term, steady Eddie, kind of thing, made billionaires out of their founders, Salesforce and that. But it's really been interesting. We're not seeing these massive explosions other than recently, you would say possibly the Tesla would be there, Facebook, Twitter, those types of things that came out a little bit later. I mean, those are close to a decade later before, but there really haven't been a lot of tech innovation, software or hardware companies that have seen this just explosive, to take over the world type narrative that people would buy into. And so, yes, stocks are rebounding in that sector, but it's not near the crazy chaos as the early 2000s, just nowhere near it.
Yeah.
And we would just walk around and look at these companies about just stupid investors. We would just think, it's been prosperous times. The last 2 decades, except for the period around 2008, it's been very prosperous times. So there was just a lot of dumb money in the marketplace. That's what we would say. There's just a lot of people who's made some money and now they're going to go put it places without really understanding what business they're in. And so very different.
Yeah. And I think also we're starting to see inflation pick up.
Yeah.
So, and that's usually, I think the first sign of it is asset price inflation. So the value of your home, your portfolio,
yeah.
Divide your hourly work divided by a share of the S&P 500. So it's, you're seeing a little bit of it at the supermarket, but if you sit in cash for too long and for years, you're going to potentially run negative. So your money needs to be productive and find homes that are sustainable businesses, real estate, and things that could appreciate versus the dollar that is challenged.
So with your business, Invest with Rules, who are you really targeted to work with? I mean, tell me who's going to most benefit from working with you.
Yeah, my ideal client is someone who's self-directed. So meaning that they manage some or all of their own money. They are looking for an experience where large funds need to buy in slowly, month after month. They have way too much capital to go after everything too fast, and they need to sell slowly. So for someone who's looking for a little bit more help in regards to what to buy, if they're looking for the when to sell, that's probably the hardest. Whether you sell quickly for a small loss or you're up a ton, you mentioned Tesla. I think it's really hard to know when and how to sell. And so that's my kind of ideal. They tend to have some experience either investing on their own a little bit. I mean, trading online is, once you pick it up, it's quite easy, but after you place your first trade, it's no different than buying anything on Amazon or online. It's quite straightforward. But I'd say that they value their, they want to do it themselves. They really want to take a little bit more of a hands-on approach and get a little bit more some guidance where, in my opinion, in today's world, I love the fiduciary standard that kind of almost everyone plays by in the financial space. I think it's rightfully so. But I do believe that if anyone is self-directed with their own money, they're kind of left alone and they're kind of pointed and pushed to a company's website.
Sure.
And I think it's really hard. I mean, granted, there's a lot of great research out there, but I do believe that there's a lot of mistakes to be made. And it's hard. I think it's because, again, we're human and our brains love to trick us, and we buy at the wrong time, we sell at the wrong time. So by having a second layer of research and someone kind of giving you, as much as some days I think I'm on top of everything, I rely on, I mean, these funds that I track, dozens of them, they're so well capitalized. They have humongous research staffs. They have amazing technology that does modeling. They could pick up the phone and call the CFO. I mean, that's so different than someone looking at old data on a website.
Sure. So what services in particular do you offer your clients?
Yeah, so for free, because I do want to provide a lot of value. One of the things that breaks my heart is when I hear about clients who sold at like the bottom of March or April of last year, right at the bottom. That breaks my heart, because I do believe that, I mean, so beyond just looking at billion-dollar fund managers, I'm looking at the trends they create. So for free, every single week I deliver an email, and in that email, I kind of have an interesting trend or something that I find that I'm looking at. Not every single week if I don't have one, but then I do as well in that email. I provide trend analysis on the US market, the foreign market, bonds, and gold. And like any trend model, nothing's perfect, but where I find a lot of value from it is it gives me kind of like a heads up. So as an example, last February in 2020, I obviously we can kind of watch the news and we know coronavirus is just kind of getting going to start the year 2020. We didn't really see it totally spread, but
Right.
about the end of February is when it hit the stock market, and it really became evident that something fundamentally was wrong. And the trend model for me, it just simply says, hey, heads up. And I get a few of these warnings of, hey, heads up. And that's the time to either protect a little bit, and I go over how to do that in one of my programs, or if you're in a retirement account and you do need the money on the shorter term perspective, it's time to play a little defense. So for free, I deliver an email. My hope is to be thought provoking, a little prescriptive. Obviously, the joy of disclosure is to mind your risk and know everything has risk. There's always risk of loss, but knowing that if you're looking for kind of interesting concepts and ideas, and then for those that are looking for a little bit more, I do have a program that is a premium paid program. And really what I do there is monthly I deliver the stocks that billion-dollar fund managers are buying, as well as selling. Every week, I deliver some, typically an update on what I'm looking at the market, kind of what I'm anticipating, not kind of prognosticating, but just, I mean, interest rates are going up, and this week they're kind of pulling back a little bit. So just talking about the ripple effects of what can happen, and just also just looking at the trends of the market, going a little bit deeper. And then I do run two model portfolios. One is based on index funds or ETFs that follow trends. They've been heavily weighted in areas like energy and financials. They don't own, if any, tech at the moment. That was something that was a trigger that, unfortunately, on a short-term perspective, it's in a downtrend, so we let it go. On the stock model portfolio, we own stocks that billion-dollar funds are buying, and the agenda is to try to hold them for a year and a day. We have rules that we follow to try our best to mitigate when times get tough, and to try to own great companies at good value that funds are buying.
Fantastic. So, question I have for you then is, do you do individual coaching through this process, or do you, are you, kind of a group thing, or how do you deliver your advanced programs?
Yeah, it needs to be on a group basis. It cannot be individualized.
Sure.
I'm not acting anymore as the capacity of a certified financial planner or a financial advisor. I always recommend to everyone to have one. I think it's important for someone to review your finances.
Right.
That could change down the road, but at the moment it's in a group setting where it's generalized information, and the information is generalized. So it's how I personally run my money. So it's kind of a look over the shoulder of someone running a portfolio. But I am as much as I have a decent runway of time where I'm going to need this for me and my family, the reality is that I don't enjoy large losses. I try to keep the losses small and let the winners run. But there's always losses, and that's why we have rules to try to preserve as much capital as possible when times get tough.
Okay, fantastic. So how do people get in touch with you again?
Yeah, my suggestion is just to go to investwithrules.com, sign up for the free email that comes on Monday morning. So that way you get kind of a taste of who I am, a little bit more about kind of the information I provide. And then once you kind of get immersed in that, you'll see that there's a little bit more information that I provide on the inner circle. And how I'm doing that now is I do open that quarterly, so I can kind of guide people through it. I plan to open that again in April. I think that the hardest part of life, I can't even imagine what you go through when you're raising your young children, but I just as much as I value helping self-directed investors invest with a lot more confidence, I want that quality time with my family. So when my son wakes up from his nap till he goes to bed, I want to be totally present and not just always running the business. So, but I am 100% focused and dedicated. But when the market's closed, it's family time. So that's really important for me.
Okay, so another question for you then. What do you put on your your looking forward hat. Okay, I'm having a hard time pulling that one out of the head today. With our new administration and trends that have been seen in, sort of different, when we've had Obama or we've had Clinton or whatever, what kind of things do you see on the horizon for 2021? I'm not asking you to be, the guru at this point in time, but just in general, what do you think things are going to look like through the year in 21?
Yeah, I can tell you what I see today, which
Okay, sure.
will hopefully kind of pull forward. So, from a market perspective, the way I see things today is when I look at the US and the foreign stock markets, both on a long-term perspective, meaning weeks to months, and a short-term perspective, maybe days to weeks, you're still in an uptrend, no matter how much noise there is.
Yep.
If you cherry pick inside of the US stock market, the tech stocks, they are acting a little weaker than other areas of the market. So what I believe is going on, because the market's always kind of 3, 6, 12 months out, is we are experiencing an awful lot of bottlenecks with our supply chain.
Mm-hmm.
And that started during the coronavirus, and there's still a lot of bottlenecks. And what that has happened is you've seen oil go back up. You've seen raw materials go up dramatically. So you're seeing this inflation come through the system. Now, this might slow down significantly. So the supply chain bottlenecks, very likely what the Fed sees, will probably slow down by the end of 2021.
Okay.
And that could lead us possibly fundamentally into maybe a slower economy. But right now, growth is improving and inflation's improving. So the areas of the market that are seeing the most love and attention, even though they're kind of having the world's smallest pullback, I think it's more of an opportunity, is financials, energy, materials. When last year, the story, kind of part one of the coronavirus investing playbook, was stay-at-home tech and healthcare. Mm-hmm. And we've moved on to this new part two. And I think that continues. And I think that story is going to be there. But right now, the 10-year Treasury, where all eyes are on rising interest rates and the 10-year Treasury, and I think that's going to be pulling in, and that gives kind of a window for kind of opportunity for more accumulation as we move to the latter part of the year. I think the other interesting parts of the world are bonds and gold have been really challenged. You had an interesting Bitcoin person on your show recently, and I think there's a lot of world moving maybe from gold to Bitcoin, because that's obviously acting financially better for investors. We might be finding more of a floor here. I think the hardest part is for most generalized investors is they have a portfolio of stocks, bonds, maybe real estate, but a lot of bonds. And bonds have been pretty lousy this year because interest rates have been going up and bond prices have been going down.
Right.
So the place to hide has not been helpful. So that's an area that my kind of readers have been primarily avoiding. And maybe it's finding a floor, but I always kind of say time will tell. Yeah. So that's kind of the way I see things today. Obviously, everything's subject to change, and we have kind of possibly an infrastructure bill on the horizon. So maybe that's even more firepower for the more growth-oriented, lower beta names like energy, financials, things that will benefit when rates go up. So that's the way I see things, obviously subject to change.
Sure, absolutely. Okay, so the $1 million question on the last one we always throw out to our guests here. Everybody has that bucket list out there, the things that they want to do before the end of their life, all those things that sound interesting or fun. Well, there's always an opposite in everything in the world. There's always an opposite law. So there's a list out there that rhymes with bucket, and it starts with an F, but I'm not going to say that. So what might be something, you've taught us a lot about who you are and your background, all that stuff. What might be something that's on your F-it list, something you just have no interest in doing and never want to try?
Wow, great question. Something I never want to try. That's a really good one.
Well, while you're thinking for it, I'll give you some suggestions. So I just had a guy on the show that says he's a picky eater and he wouldn't eat a plate of sardines. And so that was one. I did another guy that said, a couple ladies said they're not jumping out of airplanes. I had some people that said So I was going to do bungee jumping off a bridge. So, you know, it could be anything, just something that you're just saying, hey, Scott is not doing this.
So I have jumped out of an airplane.
Okay.
I have bungee jump, which I think is twice as scary as jumping out of an airplane with someone on your back.
Sure.
You know, I have for about a decade. I think I watched a documentary that threw me overboard, and I haven't eaten meat in almost a decade.
Wow.
So I think I'm going to continue that.
Okay.
I will continue my more plant-oriented diet. It just, again, I take no offense to anyone who does.
Sure.
It's everyone's life and life choices. I just think for me, I would love to one day go on a safari and go to a farm, and it's just not for me today.
Okay, fantastic. Well, it's been great. Thank you for coming on today. I really appreciate your time, your transparency, and the things you've taught us. I mean, there's always great things that we learn, and that's the whole focus of the show. So thanks for coming on, Scott. We really appreciate it.
Rex, absolute pleasure. Thank you so much.
You bet.
Talk soon.
Okay, so that's it, folks. We're going to call it a wrap for today's episode. Don't forget to stop by the show site, rexandrewshow.com. Scott's information is out there with all the rest of our guests. And just like we say every time, there's 3 things I always say: be safe, be bold, and make it a great day.